There are many ways that you can achieve financial independence, but two of them are by utilizing index funds and by utilizing rental real estate. Two of them can be great ways that you can achieve financial independence. Now make sure you stay to the end of this video because I'm going to tell you why you might want to choose one over the other, or primarily choose one over the other when you're building your own financial independence plan. The short answer that I want to offer to you really quick is that I think that rental real estate, it can help you achieve financial independence a lot faster, but it's going to be a lot more work and it's going to require a lot more skill, a lot more knowledge. When it comes to achieving financial independence with index funds, I think that this is an easier way and a more attainable way for pretty much anyone in order to achieve financial independence because it's so hands-off, but it just requires some diligent saving and diligent investing. In order to compare the two, rental real estate versus index funds, I want to offer you a scenario. So the scenario is that you're either going to be investing in broad-based index funds, or you're going to be physically buying rental real estate, renting them out, and trying to make a profit that way. This is the kind of the groundwork that I'm going to be going off of when I'm comparing these two things. And I'm going to be comparing them pretty much with a bunch of different financial figures, as you say. The first one that I want to start with is your ROI. One of the most important things that everyone worries about, right? What am I getting back from my investment? What is my return on my investment? Well, when it comes to index funds, the return on your investment is going to be more or less the same that everyone is going to get, right? Because we're all going to be investing in the same index funds. Now, obviously, it's going to differ from person to person because you might have a different asset allocation, you might have a different kind of fund that you're investing in, you might have a different time when you actually bought the fund, so you're buying them at different prices. So obviously not everyone's going to have exactly the same amount of return when it comes to index funds. However, when it comes to real estate rentals more specifically, it's going to be highly dependent. It's going to be highly dependent on where you invest, highly dependent on how you invest. It's going to be dependent on what price you got the rental real estate for, what market you're in, how much rent you can get out of it. So it's going to be just highly dependent on you as a real estate investor. Whereas index funds are going to be more or less the same for everyone, depending on when they bought and when they sold, all this kind of stuff. So I think that the winner when it comes to ROI is actually real estate. I think that rental real estate can definitely produce you higher returns than that index funds can. Now that's not going to be always the case, and again it's going to be very, very individual to that specific situation, but I think that if you are very knowledgeable and very skillful in rental real estate, then you can definitely earn more than from index funds. Next on, let's move into the costs of investing in either one of these kind of investments. Now, this is one of the biggest things that, for me personally, has kept me out of rental real estate. But let's get into it. So with index funds, the costs in order to invest in them are extremely low. We've all seen those little fees that come attached with index funds, 0.04% or 0.03%. Basically nothing. You're not paying very much in order to invest in an index fund. And now we have trades that are absolutely free. So it's never been a better time to be an index fund investor because you're not going to be paying very much money in order to invest in them. However, when it comes to rental real estate, the costs are very high associated with real estate because they have a very high transaction cost. It costs you a lot of money in order to buy real estate, and they have a very high operating cost. It costs you a lot of money in order to keep that real estate in good condition, keep it working, pay all the bills and utilities and taxes and all that kind of stuff. And so this is what really differentiates index fund investing and rental real estate investing. So I have to give it to index funds automatically because when it comes to costs, index funds are they don't really cost anything in order to invest in, but rental real estate does. It costs a lot of money. You have to have a lot of money up front. You have to have a lot of money ongoing, and so the winner is index funds. Next up, we have to talk about the passiveness of the investments, okay? And I think you probably already know the answer to this one, but index funds, they are 100% passive. You don't have any active work or any active involvement in how they perform because they represent, hundreds, possibly thousands of companies, and all those companies are operating independently of whatever you say or do. So you just pretty much, you buy them, you own them, a little bit of them by buying these index funds, and you are completely hands-off. So index funds, it doesn't get any more passive than that. So they are 100% passive. Rental real estate, on the other hand, is going to have varying degrees of passiveness. Now, if you are managing everything yourself, you could probably get a higher ROI, but it's not going to be very passive. You might have to do quite a bit of work depending on the house, depending on what you're operating, what kind of real estate. So it's going to have varying degrees of passiveness. So automatically I have to give index funds the win here when it comes to being a passive investment. It's a 100% passive investment. Rental real estate is simply not. Next up, we have diversification. And again, you're probably going to see the easy answer here, but index funds, they are automatically diversified very broadly across hundreds, thousands of companies. You can automatically diversify across equities, across fixed income, across pretty much anything. So index funds, they all offer the ultimate diversification for us regular investors because we can automatically invest in hundreds of thousands of things with a very small amount of money. When it comes to rental real estate, however, it's going to be specific to one area wherever you are investing in that physical real estate. So that's going to be highly dependent on the local market of where you are investing. And so the diversification there is not going to be nearly as high. It's actually going to be very specific. And so the winner when it comes to diversification is obviously going to be index funds. Now we have a really fun one to talk about, and probably one that's a little bit more controversial, and that is risk. So which one is going to be more risky, index funds or rental real estate? And I definitely can't, give you a very specific, like, this is the answer 100% of the time, but here is my opinion on it. So when it comes to index funds, you're going to have a certain kind of risk, and the risk is going to be different than what the kind of risk you're going to have from rental real estate. So the most common risk that you're going to be associated with index funds is the market risk. And market risk is pretty much 100% out of your control because an index fund is going to represent the market, and so you're going to have market risk. You can't really intervene there. It's going to be pretty much 100% out of your control. Whatever the business cycle is doing that year, whatever the economy is doing that year, that's going to be pretty much out of your control. And so that is the kind of risk that you're going to have to take if you're investing in index funds. That's the primary risk. A primary risk that you're going to have to invest, however, if you're investing in rental real estate, is going to be different. You have all kinds of different risks that you're going to be involved with the real estate, but in some way or another, I think that you can better control these risks when you're investing in rental real estate. You can control these risks by using various insurance, by using various different entities like an LLC to own the real estate. You can keep a large amount of cash savings in order to pay for unexpected expenses when it comes to that rental real estate. So there are many different kinds of risks associated with investing in physical real estate, but you have better control over those risks. You have no control over the risks that come associated with index funds. And so when it comes to risk, I'm going to actually have to give it to rental real estate. I think that you can control those risks, and therefore you can lower the total amount of risk that you can take if you are investing in those, and if you know what you're doing. Next up, we have another really fun one, and that is the tax benefits. So me personally, if you've watched any other videos on this channel, I love always mentioning about the tax benefits. I love talking about taxes and legally avoiding them. But for tax benefits, both of these investments are going to have some really great tax benefits, especially because with index funds, if they pay out dividends, they're going to be qualified. Most likely, they're going to be qualified, and they're going to be taxed at the long-term capital gains rate. And then, of course, when you actually do sell off some of your index funds, if you're realizing long-term capital gains, then they're going to be very tax efficient. Otherwise, if you have those index funds in a retirement account, then there's going to be all kinds of other tax benefits there as well. I'm not going to talk too much about it, but index funds, they can offer lots of great tax benefits. Rental real estate, on the other hand, is going to be a little bit different in most circumstances. In most circumstances, although it might be possible, you're not going to have rental real estate in your IRA. You're not going to have rental real estate in your 401k. Now, I'm not saying that's not impossible. There might be ways where you can do a self-directed and have real estate in that. But what I'm saying is, in most circumstances, you're just going to own real estate outside of that. So you might have your real estate in an LLC, in a separate business entity or something like that. Owning real estate is a small business. You're a small business owner if you own rental real estate, and that comes with all kinds of different tax benefits. Real estate has all kinds of different tax benefits, such as depreciation, and then all the business expenses that are associated with it. It's just too much to name, but the winner, I think, here when it comes to tax benefits, it just has to be real estate. Rental real estate, just has to be the winner here when it comes to tax benefits. Even though both of them are really great for tax benefits, rental real estate, I think, offers way more tax benefits than do index funds. Next up, we have another really fun one, and that is liquidity. So liquidity is another important thing that everyone looks for when they're choosing their investments. And here, I think you might know the answer already, but index funds, they can be bought and sold for $0 any day, pretty much any time. Any market trading day, usually at the end of the trading day if you're investing in a mutual fund, or it might be earlier if you're investing in an ETF. Pretty much, within a few business days, you can sell off index funds and you can get all your money back. So they are extremely liquid. However, rental real estate, on the other hand, it's not so easy. In order to get liquidity out of a rental real estate, it's usually going to be in the form of equity, which is going to be in the form of more debt. because buying and selling real estate, it takes a lot longer, it's a lot more expensive. We've noted those transaction costs earlier, and it's going to really cut into your bottom line if you are doing that. So rental real estate is highly illiquid, especially when compared to index funds. So the winner here when it comes to liquidity, it just has to be index funds. And now that we've gotten those out of the way, we can talk about the really fun part, and that is using these two types of investments in order to achieve financial independence. But before we move on to that, please make sure that you like this video if you're liking it so far. It really does help me out, and I really do appreciate that. Thank you so much for hitting that like button. Now, moving on to how we can use these to achieve financial independence and which one is going to be better, we know that with index funds, typically how you're going to achieve financial independence using index funds is that you're going to be receiving dividends, maybe some interest, and also you're going to have to sell off some of your shares in order to get how much money you need to live off of for that year. And typically what we like to say is that if you're using the 4% withdrawal rule, then you're pretty much going to be safe for a long period of time. So you can use a little bit less than that if you want to be a little bit less aggressive. If you have $1 million of a portfolio invested in index funds and you need $40,000 per year to live off of, that is theoretically what you could sell off 4% of your investments per year and then continue on going, and that's how you would become financially independent by using index funds. With rental real estate, it works a little bit differently. It doesn't matter so much what your net worth is at the time, but it matters more of what your cash flow is at the time. So how much money you are getting in profit, how much are you taking home each day. Let's say that you have rental real estate that is generating $10,000 per month of income, but some of that is going to have to go to the expenses associated with the real estate. A really common rule in real estate when you're doing like back of the envelope math is going to be the 50% rule. So about 50% of your income from your rental real estate is going to go to your expenses and all that. So let's say you have $10,000 of monthly income, 50% of that is going to the expenses. That leaves you with $5,000 per month. And if that $5,000 per month is enough for you to live off of personally, then you would be considered financially independent by using rental real estate. So the name of the game there is to replace your spending with profit from your rental real estate, whereas the name of the game with index funds is to have a certain amount of net worth built up where that you can utilize, sell off and utilize some of the gains from that in order to replace your spending. But the big question here is, what should you invest in and what should you pursue on your path to financial independence? And the answer to that is, I don't know. So I don't know what's going to be best for you. Only you are going to be able to answer that. But I can tell you, for me personally, I thought that the right choice for me was to pursue the index fund route. So I personally went with index fund investing for a variety of reasons. Mostly you could probably see from before when we were talking about comparing the two different types of investments. I liked that I was completely hands-off, that I pretty much didn't have to do any work when I was investing in them. I liked how flexible they were, how passive they were, and how low the fees were. So it was very easy for me to choose that rather than investing in rental real estate. However, it's a very highly personal choice. As I mentioned earlier, I think that you can achieve financial independence much faster by investing in rental real estate if you're willing to put in that work and if you're willing to basically start a business around real estate. So if you want something to be easier, more flexible, and more passive, then maybe geared towards index funds. If you want your portfolio to be more, you have more control over it, you want it to have a little bit more stability, and if you want to pretty much have a small business in real estate, then maybe you should be geared more towards rental real estate. Of course, you can definitely do both, and you can implement both on your path to financial independence, and that's what many people do, and maybe that's right for you. Regardless of what path that you primarily want to go on, index funds or rental real estate, you definitely need to watch another video that I created, my full guide to investing your way to financial independence. If you haven't watched that video already, make sure you watch that video. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.